Well, here we are again. It seems like we were just celebrating new market highs and now, bam, correction territory.
Yeah, the S&P 500 officially took a dip below that 10% mark from its peak just this past Tuesday.
10%? I mean, that's a real shift. Makes you wonder what's next, right?
Definitely makes
You're
you
right.
think. But, even in these like kind of uncertain times, there can be opportunities.
Yeah, you know what they say, right? When one door closes, another opens, or something like that.
Exactly. And that's what we're going to look at today, this potential opportunity some folks are seeing in, well, all this chaos, particularly in the information technology sector.
Right, and we came across this really interesting article from the Motley Fool.
Oh, yeah, that was a good one. They were suggesting that this sell-off, this dip, might be a good time to, think about the Vanguard Information Technology ETF. That's VGT, by the way.
VGT. And what was so interesting about that recommendation, at least to me, was the reasoning behind it.
Yeah, for sure.
And that's what we're going to try to unpack in this deep dive. Like, why is this ETF something that, our listeners, you, should maybe consider right now, especially when you look at, its history and what it's actually made up of?
Definitely worth exploring.
So, okay, let's start with the basics. The information technology sector. It's not exactly a small player, is it?
No, not at all. I mean, it's the largest sector in the S&P 500 right now.
Yeah.
Significantly.
Really?
It makes up, let me get this right, 30.1% of the total value of the S&P 500. So a huge chunk.
Wow, 30.1%. That's massive. So what's driving that? What's making it so dominant?
Well, I think a big part of that is, the sheer size and influence of some of the companies in the sector. The big names everyone knows. Apple, Nvidia, Microsoft, just those three together.
Those are heavy hitters.
They have a combined market capitalization of $8.9 trillion.
Trillion. Wow.
Yeah. And those companies, they've been driving a lot of the market growth we've seen in recent years.
Right. And that brings us back to the Vanguard Information Technology ETF, the VGT. And this isn't like your typical broad market kind of fund, right?
No, definitely not. This one's laser focused, you could say, on those information technology stocks.
So it's all tech all the time.
Pretty much, yeah. It was launched back in 2004, and it's kind of interesting to look at its track record because on average, it's actually managed to outperform the S&P 500 every year since it started.
Really?
Every year.
Yeah, which is pretty impressive. As of yesterday, March 13th, the price per share was around $546.44, give or take. It dipped a bit that day, about 1.8%.
Okay, so if I buy into this ETF, what am I actually getting? Because it's got to be more than just those three big companies we talked about, right? Apple, Nvidia, Microsoft.
Oh, yeah, for sure. The VGT actually holds a pretty diverse slice of the tech sector. I mean, it includes 316 different stocks across 12 different subsegments of the sector.
Wow, that's a lot of companies.
Yeah.
So if you had to pick the biggest piece of that pie, where's the emphasis? So if you look at how the ETF's assets are actually weighted, the largest single chunk, the biggest slice, is in semiconductors. Around 27% of the ETF is in that one subsegment.
Semiconductors. And that makes sense, right? Given everything that's going on with artificial intelligence and all that.
Right. Yeah, exactly. And that big weighting towards semiconductors, it's mostly because of, the big players in that space, like Nvidia, for instance. Their valuation has just exploded in the past couple of years.
Really? How much are we talking?
It's gone up by over $2.2 trillion just in the last 2 years. It's crazy.
That's incredible.
Yeah. And a lot of that growth, like you said, is because of the huge demand for their data center chips. Those are the chips that are powering all the AI development, all these advanced AI models.
So they're the brains of the operation.
Exactly. And NVIDIA is not the only one, riding that wave in the semiconductor world.
Right.
The article also highlighted Broadcom. They're another big player in that space. And their stock more than doubled last year in 2024.
Wow. So what was driving their growth?
Same thing, really. Strong demand for all the hardware that goes into these AI data centers, including chips, networking equipment, all that stuff.
Okay, so we're seeing that the demand for AI infrastructure is really pushing a lot of this growth.
Definitely.
But now, the article did point out that the VGT is pretty top-heavy. What does that mean exactly for someone who might be, thinking about this ETF?
Yeah, so top-heavy basically means that a big chunk of the ETF's value is concentrated in just a few of its biggest holdings.
Oh, okay.
As of January of this year, just the top 5 companies in the ETF, they accounted for over 50%, a little over 50% of the entire ETF's value.
So over half the value is tied up in just 5 companies.
Yeah, which, can be good or bad.
Right. Higher risk, higher reward, I guess.
Exactly. It's
Yeah.
definitely something to keep in mind.
Okay. So who are these top 5? I'm guessing they're names that most people would recognize, right?
Oh, yeah, definitely. So at the top of the list is, who else? Apple. They have a weighting of almost 17%. And, they're not just about iPhones and laptops anymore.
Who's getting into everything?
Yeah, they're investing a lot in designing their own chips now. And they just launched Apple Intelligence.
Oh, I heard about that.
Yeah, it's basically their new suite of AI-powered tools. Like they have these AI writing tools, and they've upgraded Siri, and they're really pushing into that space.
Interesting.
Yeah. So then after Apple, you have Nvidia, of course. They have a weighting of like almost 14%, which isn't surprising considering they're basically the leading supplier of those crucial data center chips for AI.
Right, like we were talking about.
And then number 3 is Microsoft. They have a weighting of a little over 13%. And then they've got their Copilot AI assistant, which is integrated into like all their software now. But they also own Azure, which is like this huge cloud platform that a lot of companies use for AI development. Yeah. So they're providing the infrastructure for a lot of this stuff.
That's a pretty big deal. Okay, so we've got Apple, Nvidia, Microsoft. Who are the other 2?
Number 4 is Broadcom. Their weighting is about 4%. And we were just talking about them, they're benefiting from all that demand for AI hardware.
Right.
And then rounding out the top 5, you have Salesforce. They're at just under 2% of ETF. And they're known for their CRM platform, that's customer relationship management. But they've also got this AI layer called Agentforce that's, supposed to automate a bunch of business workflows.
So basically this ETF is a who's who of the tech world, a lot of them leading the charge in artificial intelligence.
Absolutely. And it's not just the top 5 either.
Oh, right.
The VGT also includes a bunch of other like well-known tech and AI companies. The article mentioned like Oracle, Advanced Micro Devices, Palantir Technologies, CrowdStrike. So, it's giving you a pretty broad exposure to different parts of the tech world.
Okay, so we've got a good sense of what's in this ETF, but let's talk about how it's actually done, performance-wise. The article touched on its track record a bit.
Yeah, and the historical performance is definitely something to consider.
Right.
So in 2024, the S&P 500 had a decent return, like 25%, including dividends.
Not bad.
But the Vanguard Information Technology ETF, it did even better. It gained almost 29.2% in that same year.
Wow, so it beat the market by a decent margin?
Yeah, it did. And it looks like those top holdings, those big companies, they really played a big part in that outperformance.
Oh, how so?
Well, on average, just those top 5 holdings in the ETF, they had a return of, get this, almost 70% in 2024.
70%.
Almost, yeah, like 69.6%. It's pretty remarkable. But, you can't just look at 1 year, right? You got to look at the longer term.
Right, of course.
And since this ETF, the VGT, since it was launched back in 2004, it's had a compound annual return of like 13.3%.
Okay, so compound annual return, just for those who might not be familiar with that term.
Yeah, good point. So basically, that tells you the average yearly return you would have gotten over that whole period, and it factors in like the effect of reinvesting any earnings you make.
So the money you make is making more money.
Exactly. And that 13.3%, that beats the S&P 500's average annual gain over the same period. The S&P 500 only gained 10.3%.
So a significant difference there.
Yeah, for sure.
Okay, so historically, this ETF has pretty solid track record. But, what about the future? What makes this ETF potentially a good option going forward?
Well, this is where all these massive investments in artificial intelligence infrastructure come in, like the really big tech companies.
Okay.
We're talking like Meta Platforms, Alphabet, Amazon, Microsoft. They've all announced plans to like pour money into AI data center infrastructure and chips.
And how much money are we talking here?
It's a lot. Collectively, they're planning to invest over $300 billion just in 2025, just this year.
$300 billion.
Yeah.
That's an insane amount of money.
It is. And a lot of that investment, it's going to directly benefit the companies that are already heavily represented in the Vanguard ETF, like the chip makers especially, Nvidia, Broadcom, those guys.
Right.
And all that investment, it has the potential to really boost their earnings and their stock prices.
Sure. I mean, if the demand is there and they're getting all this investment.
Exactly. Although, with that much investment, there are going to be like some potential bottlenecks.
Yeah.
Like whether there's enough manufacturing capacity to actually produce all those chips, for example.
Oh, that's a good point.
Yeah, it could affect how quickly these companies can, grow and capitalize on all this demand.
Right. So it's not like an automatic guaranteed win.
No, definitely not.
Okay. So if we put it all together, we've got this market sell-off that's, pushed down the price of this ETF. But at the same time, you have this huge wave of investment happening in the exact technologies that many of the top companies in this ETF are focused on.
Right. It's like this kind of interesting convergence.
Yeah.
And that's exactly what the Motley Fool article was highlighting. They're saying that the Vanguard Information Technology ETF it's trading about 15% below its recent peak because of this correction.
So that's a pretty significant discount.
Yeah, and they're saying that this dip, this might be a good opportunity for investors to buy in at a lower price before all this potential growth really kicks in.
And they even went so far as to say, like, if you've got like $550 that you don't need right away, you might think about buying a share.
Yeah, they did. I mean, it's one way for, regular investors to get exposure to this whole sector and potentially benefit from, the growth in AI and all that without having to pick and choose individual companies.
Right. So you're basically like buying a basket of all these companies that are, poised to potentially do well in the coming years.
Yeah.
So, okay, to wrap it all up, we've got this market downturn, which is always a little scary. But within that, the information technology sector, especially if you look at it through the lens of this Vanguard ETF, it's actually being presented as a possible bright spot.
Yeah, for sure.
Its track record of beating the market, the fact that it's packed with these leading tech companies and all this like future investment that's pouring into AI, all of that seems to suggest there's potential for growth, even in the face of this, this broader market uncertainty.
Yeah, and I think that's a key takeaway. I mean, while a market sell-off, it's natural to be, a little worried.
Right.
But looking at, the fundamentals of certain sectors and specific investments, like this ETF, it can give you a whole different perspective.
Right. Like maybe instead of panic selling, maybe there are some opportunities here.
Exactly. Though, it's worth remembering that thing we talked about earlier, the fact that the top 5 holdings make up over half of the ETF's value. That means, yeah, there's potential for big gains if those companies do well, but there's also more risk if they don't. It's something to think about.
Absolutely. So this deep dive has really given us a close-up view of one potential investment during this market correction, drawing from that article.
Yeah, definitely.
But it does kind of make you wonder, right, what other sectors or other ETFs might be out there that are, maybe being overlooked in all this?
Right.
And what are the things that, our listeners should really be thinking about when they're evaluating those potential opportunities?
That's a good question to leave everyone with.
Lots to think about.
Yeah, definitely.